Do you want to buy Tesla stock, but you're not sure if this is the ideal time to do so? Don't let the dramatic drops in the price of Tesla's shares in recent weeks deter you from investing in the company. Investing in Tesla shares now may present a great chance to retire wealthy with substantial profits in the road. Some analysts believe Tesla's stock price might reach above $830 by 2025 and possibly $1,000 by 2030 as a result of the company's collaborations and global expansion. Would you like to know how much Tesla stock you need to retire and live a comfortable life? If so, you've arrived at the ideal location. We'll go into great detail on this subject in this video. Remember to subscribe to our channel and enjoy our videos as we walk you through the computations. In the Americas, the average monthly expenditure for a family of two is more than $5,000, or $60,000 annually. If you are retiring on your own, your expenses will be about $40,000 annually, or $3,200 per month, after accounting for a 3% inflation rate through 2030. You can invest $5,000 every month in an S&P 500, which has an average annual return rate of 7%, if you want to have some fun in retirement and would like to take out $5,000. The sale of Tesla shares, which are valued at about $850,000, is therefore required in order to receive $850,000 by 2030, with investor proceeds going into the S&P 500. The money are expected to survive for up to 50 years with the 7% return. Based on many calculators, we can determine the best period of time to think about retiring with $850,000 in Tesla shares, a 7% average annual return, and a $3,200 monthly budget for expenses. Now, let's calculate how many Tesla shares you'll need to buy in order to live comfortably in retirement, taking into account lower-end estimates of $850,000 and an annual return of 7% in the S&P 500 index fund. It is anticipated that the price of a fully autonomous Tesla vehicle's FSD will be around $28 by 2030. Tesla's faith in the future success of FSD is evident from the trajectory of FSD pricing increases every year. But if FSD performs as well as expected, it will be a huge source of income for Tesla, akin to a cash cow. Assuming that the average vehicle sold by 2030 will cost $50,000, the money will come from both FSD and vehicle sales. Assuming a cautious profit margin of 25%, the net income from each vehicle sold will be roughly $12,500. There might be 1.5 billion outstanding shares by 2030, although this is unlikely as Tesla might decide to use dividends or buybacks in place of diluting shares. The price per share, P/E ratio, is maintained at a conservative level of 40, and the earnings per share, EPS, is based on the outstanding shares prior to the stock split. But by 2030, it's anticipated that Tesla's stock price will be above 50. The research solely takes into account the food and vehicle sales industries because there is not enough information available for other industries, including Tesla insurance. The Tesla bot and automated cabs based on the facts at hand. The data supplied is regarded as a minimum estimate and is trustworthy. Let's talk about how many shares you'll need to test in the worst-case situation before you can retire. By 2030, if Tesla sells 20 million cars, its stock price will be about $450. Even if it is conceivable, it is difficult to think that an automobile manufacturer could sell that many automobiles. A more realistic estimate would be 30 million sales, not 55 million. With a market worth of about $20 trillion, the stock price would be roughly $13,000 per share. Because there are a lot of outstanding shares, the market capitalization is currently relatively high, but I had anticipated a decline in the future. The stock prices ought likely be steady, though. By 2030, you'll need $850,000 if you wish to survive on $5,000 a month for the next 50 years. In the worst situation, you will only require 297 shares, saving you little more than $59,400. $59,400 now could become $800,000 in 8 years if you invest it. After that, you could put that money into the S&P 500 and get at least a 7% return. And that's it. You've retired. In the worst-case scenario, you would only require 230 shares, or about $47,400, if you pledge to invest your money sensibly and refrain from wasting it. If they sell 25 million cars over the following 8 years, this investment might return more than 10 times its worth. If they sell 30 million, it could return 66 times its value. By 2030, 48,000 invested today might generate 850,000. All of this is based on the assumption that you reinvest your Tesla gains in an index fund linked to the S&P 500 index. However, if you opt for a lump sum method and do not reinvest the gains, current surveys indicate that the average individual needs $1.75 million to comfortably fund their retirement years. Your lifestyle, spending patterns, and financial objectives will determine how comfortable you can be if you inherit $1.7 million and retire at that time. With $1.7 million saved for retirement, you have a healthy nest egg that, with careful management, may support a pleasant retirement lifestyle, that is, if you have no large debts or major bills. Assuming a 4% annual withdrawal rate, a $1.7 million retirement portfolio can yield a $68,000 yearly income. Depending on the state of the market and your investing approach, this sum may change. Your needs in terms of money and lifestyle will determine whether or not this is sufficient for a comfortable retirement. Having a simple lifestyle, no significant health concerns, no dependents, and no plans for long-term travel, can make living on $68,000 a year fairly pleasant. However, you could need more money to reach your objectives if you have larger expenses or wish to live a more luxurious retirement. If you have already invested, I would advise against logging in the event of another 50-year market catastrophe. The timing of this is uncertain, but given the strength of the American stock market, it is expected to occur within the next 2 or even 3 years. Please be aware that the only sources of data used in our analysis are the FSD and cars, like the Tesla insurance robocab. The only significant criteria for our analysis are Tesla's FSD car sales, solar energy storage, and Tesla are excluded owing to a lack of clear data. As it helps prevent any potential regrets of leaning too heavily on the best-case scenario, I usually adopt a conservative strategy and lean towards the bear case. Just 300 shares would be required in the bear situation. For 8 to 10 years, hold on to them worry-free. The 800,000 value of your shares will probably rise during the next 5 years if you decide not to sell by 2030. It is unlikely that Tesla will collapse, even if it is a fantastic company to buy, as it is not a transient firm and we anticipate it to play a major role in the global initiative to solve problems for years to come. Based on the statistical data, it appears that this could be an excellent time to buy the stock. Despite some experts' claims that Tesla is expensive to increase production and expand, the company's performance has spurred a number of bull markets. Market penetration: the EV has ventured into new markets by collaborating with companies like Lucid Rivian and Neolac. Predictions from pocket investors indicate that by 2025, the stock price may rise above $830. Rivian is a more recent firm that specialized on electric trucks and SUVs, whereas Tesla is a well-known manufacturer of electric vehicles. Conversely, Neolac is an electric car manufacturer based in Europe that prioritizes environmentally friendly mobility options. Despite their differences, the businesses are all a part of the greater movement towards sustainable transportation and electric cars. Celebrities like Kathy Wood believe that the stock price will be worth more than $1,000 by 2030, and based on their resumes, it's probable that they may be onto something huge for Tesla in the previous 2 years. The business recently beat consensus forecasts after delivering 108,600 autos in the most recent quarter. Tesla is taking steps to make green energy more accessible and broad. These include producing efficient solar panels, rechargeable lithium-ion batteries, large-scale energy storage technologies, and a network of fast charging stations. Tesla is also investing extensively in research and development to improve the efficiency and affordability of green energy options. The corporation is working on creating new battery technologies as well as investigating innovative ways to integrate renewable energy sources into its grid. Tesla's ultimate goal is to expedite the transition to renewable energy and eliminate global reliance on fossil fuels. Many people desire to be able to enjoy retirement without worrying about money, yet relatively few people take the necessary steps to bring that dream become reality, and many retirees still need to construct a retirement plan. It's crucial to plan for the future by making smart investments, because this is not necessarily the case for everyone. Therefore, based on your annual spending, you may determine how many Teslas you'll need to maintain your quality of living after retirement. Tell us what you think in the comment area below. If you like this video, press that like button and subscribe. See you in the future video.